And it's just so important that people understand that if silver fails to deliver within 72 hours, you're not going to see markets open. Markets across the globe will not be able to open, in my opinion, within 72 hours. I think that's not really the right way to look at it. It shouldn't be concerning if you're sitting on silver and markets close. I can't think of another asset that I want to have in my hands other than a loaded gun and food. I cannot think of any monetary asset that I would want in my hands other than silver if markets close. And I'm not dissing gold. Gold is for, that's your store of wealth, but you're not going to trade in gold.
The real story, the big story is silver. Why is silver the metal to watch right now?
I was going to say we can start with silver because that's where the financial system very well could end, is with silver. There's obviously huge tightness all over the world in silver. India has doubled the amount of ounces. Forget about dollars or rupees. They've doubled the amount of ounces they're importing. The bullion dealers in China have basically closed down and they're not selling silver. The one bullion dealer that is selling silver is selling it at $128 an ounce. Silver's gone into backwardation where the futures or where cash is higher than the futures. The lease rates have exploded. It's primed and set up for failure to deliver. And I can't stress enough how important it is for silver not to fail to deliver, because if it does, it'll immediately spill over to gold. And you get action in gold like we're seeing in silver, that's the end of the system. And I say the end of the system because confidence will entirely break. And the fractional reserve / fiat system runs 100% on confidence. And if you break confidence, and it goes back to what my late partner Jim Sinclair used to say, what is the value of a contract that cannot perform? And the answer is zero. And he posited that you could see gold futures at $10 offered, no bids, and $50,000 bid and no offers. Meaning people will not accept contracts because they know they're not going to perform. They want the real deal in their hands.
Right. And then the spot price becomes the only price. You're not going to have this thing with the futures price and the spot price and all this other stuff. You mentioned backwardation on the silver side. I mean, right now, I'm looking at the prices in real time right now. Spot gold, even gold. Spot gold's at 42.03. The futures contract's at 42.13. So about $10 off. There's about a $10 delta between the futures contract and the spot contract. So you may even start to see backwardation spill into the gold price relatively soon, maybe by the time you're watching this video, guys.
Right. Exactly correct. And things, obviously, because we live in a computer age, things happen so much faster, than they did 40, 50 years ago. And we should talk a little bit about the two spikes in silver that we had previously to $50. 1980 with the Hunt brothers, and then 2011. The Hunt brothers, that was if you want to say that was vapor at the end. I mean, there was a huge spike. It was basically an intraday spike, or within a week's period of time. They did not stay at $50 for any real length of time. And then again, the same thing happened in 2011. We had the spike up. It didn't go through 50. It fell back, and then they smashed it. And of course, they smashed it in 1988 also. This time, I know it's not good to say this time it's different, but it is different. It's already different. You can see it. We've been over $50 now for a week? Maybe a week and a half. But the thing is, we've gone through 50, and the buying, if anything, has increased. And the risk here is that the chart goes parabolic. And the blood in the water that the sharks smell is that there's not enough supply, and that that they can break these markets. And when I say break the markets, you've got too many longs demanding delivery, and there's not enough supply. And we're going to find out that both gold and silver have been fractional reserve markets where they counted on only 1 or 2 or 3% of the longs standing for delivery. It's been a process. This has been taking place for 2 or 3 years now. If you look at both gold and silver on COMEX, the first notice day, and I'll just use a number of 100. Let's say there was 100 contracts standing for delivery. Prior to a couple of years ago, 3 years ago, what would happen is you have 100 contracts going into first notice day, and by the end of the month, it might be only half or 25%. In other words, the longs liquidated, took cash settlement, and walked away. But what's happening now is you get first notice day with that same 100 contracts, and by the end of the month, you might have 150, 200, 250 contracts standing for delivery. So no longer can you count on first notice day being a big number, and that's going to shrink from there. What's happening is buyers are set up, they're buying that month contract and saying, I want delivery. So they're piling up now. They're forming a line, if you will.
Wow.
It's a bank run into gold and silver, and that's what's going on with COMEX.
And even in the retail space, I've seen this footage of lines being formed outside of Australian bullion dealerships, and you mentioned the shortages in China, but here in America, it's still another sunny day in America. How long until this kind of finds its way here?
You're not seeing retail in North America buy. You've not seen them buy for the last 9 months to a year. What I've seen as a precious metals broker, I've taken more sale orders in the last 12 months than I had combined in the previous 15 years. And what that tells me, and I've asked people, why are you selling? And 95 plus percent of the time, people say, I need the money. I got to pay taxes. I got to do this. I got to do that. The money is running out on the streets in the United States, the real economy. Another thing you can look at the traffic flow in Las Vegas. I mean, that's down something like 18%. What that shows you, I mean, those are real-time numbers showing you that the real economy is having a hard time. It's slowing down. You look at the official government numbers, they're all bullshit. They're telling you the economy's growing, inflation's coming down, everything's great. That's not the case. Now, in the rest of the world, yeah, you're seeing lines all over the place. I mean, how is it that other than possibly the government telling them don't sell any silver, we want to portray a shortage, but I don't think that's the case. I think there's a real shortage. Actually, I know there's a real shortage. I mean, just look at what's going on in London. They're scrambling to be able to make deliveries. And it's just so important that people understand that if silver fails to deliver within 72 hours, you're not going to see markets open. Markets across the globe will not be able to open, in my opinion, within 72 hours.
That's what I was going to ask. Oh, I mean, wouldn't they just shut down the markets like they did with they did something similar to that with a nickel futures market back in 2022. Nickel spiked like tens of percents within a single day. I mean, I expect over 100% within
150%. But they canceled, and they canceled all those orders. I mean, I think there's still lawsuits going on about that. But basically, what they did was they pulled the plug on that market, and they said all the days trading didn't count; they weren't trades. And that the way they did that was they didn't have to pull their pants down and say, "Look, we can't deliver this."
Yeah. So then, if you're stacking silver, isn't that a concern to have? Is the possibility that they just close the markets down, and then there's no there's no set price on your silver, or the last set price is the only price?
I think that's not really the right way to look at it. It shouldn't be concerning if you're sitting on silver and markets close. I can't think of another asset that I want to have in my hands other than a loaded gun and food. I cannot think of any monetary asset that I would want in my hands other than silver if markets close. And I'm not dissing gold. Gold is for, that's your store of wealth, but you're not going to trade in gold. I mean, you're going to have a hard time with silver eagles or 1 ounce bars or 1 ounce rounds, silver rounds. You're going to have a problem getting change back. I mean, if you deal with a farmer and let's say you want 2 dozen eggs, how are you can't get change back, but a silver dime will do it.